Alan is standing by in Grand Valley, Ontario. Go ahead, Alan.
Hello, David, and I would like to thank you for your past ideas. I've been listening to you for quite some time, and I really appreciate your investment views.
Thanks so much.
And I think
on the stock, Alibaba, listed on the NASDAQ.
Sure.
Thanks a lot, Alibaba.
So Alibaba, of course, is right in the heart of e-commerce and right there alongside Amazon. It really is a juggernaut growing at a tremendous rate. I think the most recent quarter revenues were up 63% and earnings were up 65%. Look, the internet stocks have had a tremendous year, especially internet retail as a whole. If you look at Kweb, Kweb, that's the Chinese web companies, including Tencent and Baba.
An ETF,
it's been one of the best ETFs to own. I've been fortunate to have that over the course of the year. Look, this is very similar to NVIDIA. There's a little rotation going on right now from some of this stuff into some financials and into some industrials. But I have a very hard time believing that if the market has a decent year next year, which I fully expect is going to be the case, that these are not going to participate. So there's bound to be a little bit of year-end noise here. And it would actually surprise me if we didn't actually see a little run-up at the end of the year, because you're going to have some people who haven't owned these things want to have them on their sheets for year-end. But unless the stock really broke down technically, which it has not, I think if this is one of those companies that you probably could have a little piece of to participate in this very important structural theme, which is not slowing down at all.
Marcel in Montreal, go ahead, please.
Thank you for taking my call.
Pleasure.
My question is regarding Labrador Iron Royalty.
Yep.
I've done very well up to date. I was just wondering if it's still to continue keeping it.
Well, Marcel, congratulations. This has been a great holding. We spend a lot of time talking about, in the income strategy that we run, owning things that could be a great offset to rising interest rates. Because, people make these income investments, and then if they're tied to the bond market and interest rates go up, they don't make any money. Canada is unique in that we have a bunch of companies that are built in a structure to pay investors a regular dividend or cash flow stream, but at the same time are tied to the global economy. And Labrador Iron Ore is a great one. So Labrador Iron Ore, of course, gets a royalty stream on every pound of iron ore produced by the Iron Ore Company of Canada.
Rio Tinto, yep.
And really, it doesn't matter what their profit is; they're getting paid. And so, if we think the global economy is continuing to accelerate and improve, which we do believe, we see improving PMI data around the world, then demand for basic materials should continue to improve. And so Labrador Iron Ore is in the middle of that theme. So, I think that this is a company whose dividend will be tied to the world's economy. And so if we think there could be rising rates and reflation going on in the world, Labrador and Iron Ore probably participates very well. Technically, when the stock traded through kind of $21, $21.50, it broke out, sitting $24 now. Could it pull back to 22? Sure. But I think that the long-term theme for materials, and in particular this corporate structure, this structure is really attractive.
Yeah, so they get a 7% royalty and then a 10-cent per ton commission on all iron ore produced. Marcel, thanks for that question. Dawn in Centreville Mountain, Nova Scotia. Go ahead, please.
Yes, I'm wondering what your guest may think on BCE. I know he had a bit of a negative outlook on the telecom sector. I was listening to his comments earlier. Anyway, I know it's had quite a run-up in the last few weeks, and it's sort of I don't know if an all-time high, but it's high. So I'll hang up and listen. Thank you.
No problem. Thanks very much.
So I just want to be clear. I'm not negative on BCE as a company. I'm not negative long-term in the industry. However, there are some structural challenges in wireline telecom. And these companies do historically get tied to interest rates. And we believe that we saw the secular long-term low in interest rates in June of 2016. and we are unlikely to revisit those lows, and that in fits and starts, rates move higher from here. Now, it doesn't mean that, for instance, from January until August, we had rates come down a little, and things that are attached to interest rates had a nice rally. But, you know, BCE has basically been in the 50th percentile as far as return goes versus the market, which is not great. And I think it's not the number one company that I would choose in the group. If you're going to buy the group, I would prefer you looked at TELUS.
And BCE is the parent company of Business News Network through its ownership of Bell Media. Max is in Vancouver. Go ahead, please.
Good morning, gentlemen. Thanks for taking my call. Dale, about a year ago, I bought high-yield Blackstone at around $25. It's done well, but it's very volatile now. So what is your opinion about that? And since it's nearly Christmas, can I ask a side question? And that is, your top 5 holdings are all U.S. ETFs. Now, many managers won't pick ETFs, saying they are paid to pick stocks. So any comment on that? Thanks so much. I'll hang up and listen.
Thanks.
Sure.
So the question there, as I heard it, was ETFs versus picking stocks.
Yeah, so let me be clear. So we run a number of different funds. And so this piece that is put up on the screen is talking about one particular fund, which is our Global Macro Fund.
Okay.
And the Macro Fund invests in macro themes. And as it is in a macro fund, you don't tend to buy individual securities. You invest in vehicles that give you exposure to a sector or an asset class or geographic region. So for that, I think ETFs are perfect. And it's a fund that's, you know, sort of returned a little over 15% a year over the last 5 years. So it's really working because it's getting to the right neighborhoods. Our other funds all invest in individual securities, single securities. And I'm a big believer in that as well. You add lots of value by finding great securities within the right neighborhood. But that fund happens to be a macro fund. So on Blackstone, there's a number of different Blackstone securities. Assuming that you own Blackstone Group, it really is focused in private equity. I, right now, really prefer to invest in companies that are in public securities. So in 2000, when the stock market rolled over, lots of investors slowly stopped investing in public markets and started making private equity investments because they weren't priced every day. And because you were not subject to the same kind of compliance and regulation you were in public companies. In 2013, as I said, I think we began a new long bull market in public market equities. So I'd rather invest in companies that manage public market equities than private equity. Private equity is very expensive and a little bit crowded. They're having a hard time finding really great deals to invest in. Public market asset managers, I think, are having a better time of it. So I would prefer like a BlackRock to a Blackstone.
Yeah. Okay, that's interesting.
Okay.
You think the time for public markets is here.
Public markets, T. Rowe, Blackstone, there's lots of asset managers. You go back to the 1980s, Mackenzie Financial, Trimark, fantastic investments.
We'll be back with David Burrows. He's answering your questions on North American large caps, 1-855-326-6266.